Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So this week is looking like it is shaping up to be a big one for the price of gold and silver and for these markets. There's a number of events which we'll cover in this video which are going to play out this week, which I think could have a major impact on what happens with gold and silver. So we'll delve into that as we go through this. Let's just start off today with the chart of gold, because gold today, already starting off Monday this week in a big way, setting another record all-time high close this afternoon. Price of gold today, we'll zoom in here, closed today at $2,517. That is a record high close for spot gold, and that follows what gold just did on Friday, which was a record all-time high weekly close at $2,512. So gold breakout continues. Now, let's zoom this out again, and we can see that, what gold just did, breaking a record all-time high, is not only a big deal for that reason, but also from a technical standpoint, this is very significant. We have got gold, which has been trending within this consolidation going all the way back to April, and we broke out of this consolidation back on Friday the 16th of August, so a little over a week ago. But then look what happened. Every trading session since then, gold has been flirting with going back into this range. So the day after we got the breakout at 2,500, a very psychologically important level, you had the next day gold dip back down, was met by strong buying, closed above this trend line. Same thing the next day, dipped below it, closed well above it. The next day it dipped below it, it closed above it. Then on Thursday we had kind of a dead cat bounce in the dollar. We had gold falling back into the range, closing down here in the around 2480, but then the next day, we all know what happened on Friday. We had the Jackson Hole speech. Fed Powell basically pre-announced easy money rate cutting in September. We'll talk more about that in the tail end of this video in just a moment. But that was significant because gold, got back out of this range. And then today, if you notice, that was the first day that gold didn't trade below this line here, trade back in that range. So it looks like the breakout to new record all-time highs, the next phase of this bull market is underway. Now, I do want to say a thank you to all the familiar faces I see in the chat there. Thanks for tuning in. Do me a favor, smash the like button, subscribe to the channel if you haven't done that yet. And then I want to read a comment here from the Parallel Sound. He says, I don't want gold to skyrocket. It means the worst is about to happen to our livelihood, wars, and economic depression. Well, look, I don't necessarily want gold to skyrocket either, because I want to buy more of it, right? Same thing with silver. But the markets don't do what we want, right? They do what they do. And I would agree that gold breaking out to record all-time highs is sending us a warning. It's a warning that what is about to come is going to be very bad for the dollar. Price of safe haven assets are about to move much higher. I mean, think about it. On Friday, Powell, Fed chairman, announced essentially that rate cuts are on their way, and yet we have gold sitting at record all-time highs. I mean, that is not a good sign, right? And the dollar is breaking down. Let's take a look at the chart of the dollar. I mean, the dollar broke down below a key resistance level back around that time that gold was breaking out. A little bit of another one of these counter trend rallies today, but I think that'll be short-lived, especially when we talk about what is coming the rest of this week. Now, as gold has broken out to record all-time highs, another thing that has broken out to record all-time highs is Goldbacks. These are gold products. It's an alternative gold-based currency. Each one of these notes contains 1/1000th of a troy ounce of gold. I'm a big fan of these. I think I started stacking these when this price was under $3. But, while some stackers out there don't really think that these need to be part of your stack, and, maybe they don't. I don't give you financial advice. I just tell you what I'm doing. I've been stacking these things for a while now. And at this point, I'm pretty sure I'd have to check, but I think that my Goldbacks have outperformed my silver. So certainly something to look at, especially when you consider that this $4.99 price, this is not just, it is a high premium over the spot price of gold, first of all, because one of these contains about $2.50 worth of gold. You got to pay $4.99 to get it. But at the same time, you got to recognize that Goldbacks are kind of unique in that they have a 0% buy-ask spread or buy-sell spread at some of these dealers like the UPMA. They sell them to you for $4.99, but they also buy them back for the same price. So I'm pretty happy to have some of those in my stack. And don't forget that you can also get something very unique with Goldbacks at the UPMAs. You can get a Goldback lease where they will actually not only store them for you for free, but they will pay you between 2 and 3.5%, depending on the size of the lease, paid in Goldbacks. So you can actually earn interest on your gold. So don't forget to check them out at upma.org. Now, I saw this post from Peter Spina, not sure how to say his name, I've only ever read it, but he's from goldseek.com, silverseek.com. And this was an interesting point he made. You know, looking at the gold to silver ratio, he says that buying silver here while gold is soaring past $2,500 an ounce is like getting to buy gold back at $1,000 to $1,500 an ounce. It says silver remains a screaming buy through the perspective of ratio. And I tend to agree with him. And I mean, think about it. How many of you out there, if you could go in a time machine and buy gold back at $1,000, I mean, how much would you buy, right? I would back up the truck if I could do that. And yet that is kind of what buying silver is like today, because the ratios are so skewed in favor of silver at this point, meaning silver is incredibly undervalued to gold right now. Let's take a look at the chart for that, because this is an interesting one too. So silver right now is at just under $30. Now, if we examine the chart here, you can see I've got a couple lines drawn. One is this downward trending triangle, which silver broke out of around the same time that gold was breaking out of its trend line there, or its consolidation pattern, breaking out above $2,500. Same time that the dollar index was breaking down, you had silver breaking out of this pattern. Now, that is a bullish development, and it's been pretty much a straight ride up, except for last Thursday, since that time. Today, we did something important. So this blue line here, this is the $30 level, and that is another one of these very psychologically critical levels, because it's a round number. Silver has only been above $30 briefly in the past decade. That was back in May when silver broke above 30 bucks. I mean, it's been a long time prior to that since silver was at $30 or higher. Excuse me. But today, we actually went above 30. We did. We didn't close at it, or rather above that critical level. We closed at around, what are we at now? 29.89. So just hovering below this critical level. Although silver was in the green today, it did put on some gains. You can see back on Tuesday, August 20th, we kind of tested that line, dropped back down. Now we've tested actually breaking out above the $30 level, closed below it. Maybe we'll have to test it a few more times, but I think what silver needs here is it just needs a catalyst, something to get it to break above that level. And then above that, really the only significant resistance I think will be here around the $32.50 level. That's the high that silver hit back in May. So we've got two hurdles to overcome, the $30 level and the $32.50 level. If we can close above $32.50, it will be a short ride, I think, to new record all-time highs in silver. Of course, a lot of work to do before then, but things are looking positive. And I do believe that this week we may very well get the catalyst that silver needs, at least to get back above $30. No, I did not watch the Australian Gold Conference. Got someone asking in the chat. I will check that out, though. It should be interesting. So what is it that could drive silver above $30? Let's talk about a few potential catalysts. And before we do, today's video sponsor, SD Bullion. They've got these Britannias on sale for $2.29 over spot. It is a sovereign coin, any quantity pricing. So if you're looking to pick up some physical silver before it begins to move towards record all-time highs, this is one of the things I would check out. Anytime you can get a sovereign coin at a relatively low premium, I think that that is a nice way to stack silver from the Royal Mint here. You know, you got King Charles on the back, you got the Britannia image on the reverse. And, Britannias are a nice low premium sovereign option right now. To me, it doesn't really matter what's minted on the coin. It's more about the fact that it is just from a sovereign mint. It's going to be somewhat recognizable, perhaps more so than your generic bars. So if you want to buy some silver, check them out with the link down in the description. Now, moving on to the Market Watch economic calendar, I want to talk about a few of the things that are going to be playing out this week, which could be a catalyst for both of the metals to move higher, but especially for silver to get above that $30 level. So first of all, on Wednesday, you've got at 6 p.m. a speech from Atlanta Fed President Raphael Bostic. Now, we know that the markets hang on every word of the central bankers, and that means that this could have an impact. Now, Gypsy Tree in the chat here says, go to your local coin shop. They're loaded with physical silver right now. You are correct, sir. Yeah, that's why premiums are relatively low right now. That's why you can get sovereign coins for, $2 and change over spot. Expect when the general public starts moving into this space for that situation to reverse. But again, now is a good time to get physical metal, I think. There's not a lot of people stacking right now. That's a fact. That's why premiums remain low. But that's going to change when silver starts to break out. And personally, I'd rather buy before that changes and before the public starts piling into these things, because, what's coming is more rate cuts. And if what Raphael Bostic says on Wednesday confirms that, then that's going to mean that Thursday we might see a nice move in the silver price. Also, on Thursday morning, you get initial jobless claims. So what we're looking for here to drive gold and silver higher is weak jobs data and lower inflation. Those would be the two things that can drive gold and silver higher. Now, we've got on Friday the Fed's preferred measure of inflation, the PCE index and the core PCE index. So Friday could be another big day for the metals. So if we get a combination of a dovish Fed on Wednesday night, weak jobs data on Thursday, and then a low inflation print on Friday, that could really light a fire under these metals. Now, that might seem like a lot of ifs, but do keep in mind that I think that the Federal Reserve has shown their hand now that they really need to get ahead of what is happening in the economy. We know that the BLS has revised the jobs numbers for March 2023 to March 2024 down by almost 1 million jobs, 818,000 jobs to be specific, that we had originally been told were created. Turns out they weren't. So, I think that the Fed really is going to try to paint the picture here that they're going to be easy. And again, it's not because inflation is defeated. The inflation, all measures of inflation remain elevated well above the Fed's 2% target. And yet they need to cut because, you've got an economy that's addicted to easy money and things are starting to break. And so, they're going to come to the rescue here. And so I do think that we could see a jobless claims number that is weaker than expected. Again, because, these numbers, they don't reflect reality. They reflect the situation, on the ground. They reflect what the central planners, the political elites want, I think. So what they need now are weak jobs numbers to give the Fed the cover it needs to print more money. And same thing with inflation. They cook these numbers. They kind of, can release whatever data they want, I think. And so same thing goes on Friday. We know inflation isn't going down, but what do you want to bet that the data portrays it as, softer or cooler than expected inflation, so the Fed has cover for what it needs to do. And that's going to light a fire under the gold and silver market. Now, it might also help stocks and paper markets. And of course, as we head into the election here, the establishment, the ruling political elites, the current folks in power, they're going to want assets to be on the rise. They don't want to allow a stock market crash before an election. They're trying to keep their jobs, So again, expect data this week to support higher gold and silver prices. And again, we got Bostic is the one who's speaking at the Wednesday evening. Well, listen to what he recently said when he was interviewed at Jackson Hole just a couple of days ago. This kind of gives us an idea, perhaps, of what he's going to say in that speech.
every meeting is live. What I'll say is this in the context of September. So for most of this year, my view and my outlook was that we'd do one cut this year, and it would be in the fourth quarter. Inflation has come down faster than I expected. The labor markets have weakened considerably, such that we're back to sort of a solid, strong place. And that's all suggests to me that it's going to be appropriate to pull forward the beginning of our rate move. So being open to something in the third quarter, September, November, is definitely in play.
So yeah, that's what he says regarding rate cuts in September, and that sounds pretty dovish to me. He's saying that inflation has fallen faster than expected, that the employment mandate now is more in balance with inflation risks, and so I expect that we're going to see a dovish Fed Bostic on Wednesday evening, and again, that's going to be very supportive of the gold and silver market, especially considering that these trading algorithms, they all just hang on every word, and I'm sure that they have an AI now that just goes through the scripts of what these central bankers are saying during these speeches and at press conferences, and they behave accordingly. So if he comes out dovish, that's going to be very supportive of the metals. And then also this week, we have got, of course, renewed geopolitical tensions, escalations around the world. Over the weekend, you had a major exchange of fire between Israel and Hezbollah in the Middle East. Israel said that they saw preparations for a major strike by Hezbollah, so they launched airstrikes, more than 100 Israeli fighters flying into southern Lebanon and striking what they said were thousands of rocket launching positions of the Iranian-backed militia group. Following that, you had hundreds of rockets. I think the last count I saw was 300 plus rockets and drones fired into Israel by Hezbollah. So escalations abound in the Middle East. And, we still haven't seen the other shoe drop when it comes to Iran's much touted retaliation. Hopefully cooler heads prevail, but I don't think we can count on that. And therefore, there still remains the potential for a significant escalation in the Middle East. The same situation is occurring in Eastern Europe right now. Russia has launched one of its largest airstrikes against Ukraine in terms of missiles and drones just over the past 24 hours. So Eastern Europe, you got Ukraine pushing into Russian territory using U.S. Supplied munitions to strike targets inside of Russian territory. Now you have got Russia retaliating with airstrikes. There are also troop buildups on the border of Belarus, which Ukraine has issued warnings about. And of course, with all the uncertainty geopolitically, the one thing that we know will happen is more borrowing, more deficit spending, more financing of these proxy conflicts around the world. Already we're $35.26 trillion in debt, but you can guarantee this number is heading much higher. And that also, in the long run, especially, is very supportive of higher gold and silver prices, because ultimately all of this debt is going to have to be monetized by the central bank. Now, I see in the chat some folks are talking about central bank buying. Now, yeah, as far as I know, central banks do not purchase silver, but they do buy gold. They've been buying a lot of gold. Quarter two of this year was record gold purchases by central banks, I believe, according to the most recent World Gold Council data. And notably, one major central bank, the People's Bank of China, has been sitting out for the past 3 months of buying gold, citing elevated prices. But, they've got a lot of dollars. They need to do something with those, and I believe that before the year's end, the PBOC will likely return to buying gold. That is, assuming they haven't simply been buying it under the table and just not reporting their gold purchases. Keep in mind, China is the world's #1 producer of gold. So, where does all the gold that China produces domestically go? Could the bank be hoarding it and not reporting it? 100%. So, you can expect that if the People's Bank of China does openly begin return to gold buying, that again will put more upward pressure on the price of gold. As we're being told, according to the official statements from the bank, You've got gold breaking out to record all-time high prices again today. Once again, record high after record high for gold, despite the fact that the Chinese central bank has been sitting out. Let's take a look back at this gold chart. So what happens when they begin buying again? This is absolutely going to soar. One other chart that we should look at today is copper. Copper is breaking out today too. I think this confirms what we're seeing in the other metals. I mean, look at copper here. It's been in a downtrend since last May, along with the other metals. And when back in May, it hit a record all-time high. Then we've had a correction, a pretty significant correction in copper since then. But it's looking like today it is breaking out. So this, I think, is just confirmation of what we're seeing on the other charts for both gold and silver. A very bullish setup here for all of the metals. And this week, there's no guarantees, of course. We have to watch and see what the data shows, what the Federal Reserve President Bostic says. But it's looking like there are ample catalysts this week to stimulate a return to, a breakout for silver and to see further all-time highs for gold. So leave me a comment down below to let me know what you think about these developments. What are we going to see this week for gold and silver? Are we going to see them break out to new highs in gold? Are we going to see silver resume its run higher? Do you think possibly we could take out the May highs in the near future? I think that is certainly within the realm of possibilities. So leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker